Ladies and gentlemen, good day and welcome to Britannia Industries Limited Q1 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Mayank Mundra from Britannia Industries. Thank you, and over to you, sir.
Thanks, Neerav. Hello, everyone. This is Mayank from the Investor Relations team. I welcome you all to the Britannia earnings call to discuss the financial results of Q1 22-23. Joining us today on this earnings call is our Managing Director, Mr. Varun Berry, Executive Director and CFO, Mr. N. Venkataraman, Chief Sales Officer, Mr. Vipin Kataria, Chief Marketing Officer, Mr. Amit Doshi, Chief Procurement Officer, Mr. Manoj Balgi, and Chief Development and Quality Officer, Mr. Sudhir Nema. The analyst deck is uploaded on our website. Before I pass it on to Mr. Varun Berry, I would like to draw your attention to the safe harbor statement in the presentation. Over to Mr. Varun Berry with remarks on the performance.
Good evening, everyone. Welcome to the Britannia analyst call. So I would jump into the deep end. If you were to go to page 3, this is the story of the last 6 quarters, and it doesn't paint a great picture from an inflation standpoint. So if you see, Q1 has been from a consumer food price inflation, which is published at about 8%. The US dollar has strengthened versus the Indian rupee, but getting to the bakery industry, I think this is one industry which has faced the brunt of inflation during this quarter, because wheat has been the single largest inflation for us. So if you notice, we've had an inflation, if you compare it or index it to Q3 of 2021, we've had an 80% inflation on wheat. And similarly on palm oil, there's been a 90% inflation. The only difference is that on wheat, the difference between Q4 and Q4 of 21-22 and Q1 of 22-23, it's gone from a 50% inflation to a 80% inflation, while palm oil has gone from a 80 to a 90% inflation. So wheat is really the largest part of the inflation that we are seeing. And the only good news is that towards the end of the quarter, it's come down to a lower level than what we saw during the quarter. So, which points towards a fact that maybe as we move forward, things could ease up a bit. Similar numbers on the next page. If you were to look at same 6 quarters, if you look at how the inflation has moved from Q4 to Q4 21-22 to Q1 of 22-23, you will again see that there are certain ingredients, certain raw materials which are particular to the bakery industry. So wheat flour has gone up considerably. Similarly, packaging material and industrial fuels have gone up considerably. So the key commodities are up, and that's what we've seen. But hopefully things will come under control as we go up, as we go through the balance of the year. So the numbers are there on top of the slide. Basically, wheat flour is a 20% quarter-on-quarter, industrial fuel is 15% quarter-on-quarter, and palm oil is a 5% quarter-on-quarter, which in effective terms is about 180 crores of inflation in this quarter alone. How have we managed this? Clearly, our weapons continue to be the same. There is no alternative to price increases, and we continue to take price increases. Second is obviously our cost optimization program. We've taken necessary price increases which are really not covering inflation at this point in time, but a good part of this will be covered by Q2 of this year. Cost efficiency programs, as you're aware, we used to do about 2% of revenues. This year, we're looking at doing approximately 3% of revenues, which will accrue to our P&L this year. Moving on to the next slide, which is slide number 6. We have delivered consistent top-line growth, and that continues. We have delivered market share gains for almost 36 quarters now, and that also continues despite the fact that as market leaders, we've taken the pricing before everyone else, which proves that we have the capability of charging a premium on all of our competitors. So our revenue on a 12-month basis has grown by 9%. Operating profits are down 11% because of what I just explained to you, and market share continues to move forward in a positive way. Moving to the next slide, this is a slide that you've seen every quarter and every time on our earnings call. So the 5 planks that we have for driving profitable growth are distribution and marketing, heightened innovation, developing and nurturing the adjacency business, enhancing our competitiveness in everything that we do, and sustainability. And I will cover these in a little more detail as I go forward. Coming to the first, which is distribution, rural has been moving well for us. While we hear differently from other companies, we have done well on distribution. And just to remind you, for us, general trade is the most profitable part of our business, and hence driving that is very, very critical. So as far as rural is concerned, now we have 27,000 rural distributors, and our growths in rural are 1.5 times what our growth in all India are. Second, the organized trade, which had taken a hit during the COVID days, has continued to move upwards. So it moved from 20 to 21 at a plus 2% in terms of contribution and saliency, and now it's moved even further by another 200 basis points as far as saliency is concerned. Our e-commerce business has moved to 8x what it used to be in Q1 of 2020. It's large enough. It's over 2.5% of our total revenues, and we've embarked on a journey to make sure that we do this the right way. So we partnered with a consultant who helped us structure this in a way that we ran it efficiently, and that's helped us quite a bit in the last quarter. On marketing activities, I have Amit here with me. We've had some very exciting product launches and some very exciting marketing campaigns as well. We've also leveraged digital quite well. So I'll request Amit to comment on these slides.
Hi everyone, good evening. As
sustainable growth journey in bread. As far as croissant, I just spoke about that. We are scaling it up nationally with great results. It's doubled in the markets where it was present, which is Calcutta and Chennai, but it's doing extremely well in the new markets as well. Channels, which is modern trade and e-com, again doing very well. Dairy, we've had another strong quarter with robust double-digit growths. Winking Cow, where we really leveraged the season, has grown at 140% over last year. International, we've extended our leadership in Nepal with another very, very strong quarter. And Middle East is coming back to a healthy double-digit growth now. Moving on to the next slide, which is that of cost efficiencies. So we worked very hard, basically because the bakery industry was facing the brunt as far as inflation was concerned. We really, really doubled down on looking at all the cost efficiency measures that we could outline. And our CFO, Venkat, along with other members of all the functions, have really taken this on very, very seriously. So if you were to look at the big blocks out of this, distance to market, we've reduced this by 4% in Q1. And this has been done by creating flexible manufacturing capabilities to house multiple products in most of our plants. Truck utilization has become better. This has been done by leveraging technology, obviously very focused execution by our very, very skilled team, which has helped us enhance the truck utilization by about 3%. Market returns, which is a fantastic story. We were at our ever best, in Q4 of last year, but in Q1 we've reduced that even further by 15%, and this has been possible by process changes that we've brought to the organization. On renewable energy, which constitutes now 40% of the power consumption, and obviously has a reduced cost, which is 30% less than what normal power cost is, has given us great returns as well. And finally, we worked on optimal power sourcing by rationalizing our DG usage, which has led to a power cost reduction by 6%. So some very, very good initiatives here. And I've been asked many times in the past, how long is this cost efficiency journey going to go on? And I've always maintained that this is a continuous process. And this quarter and this year, as we see, we are looking at even becoming better than what we've done in the past. So from a 2%, we are looking at providing a 3% savings to the bottom line. Moving on to slide number 13. Big news here. We've achieved 100% plastic neutrality in this quarter. And Sudhir, who heads R&D and quality, has worked very hard to make this happen. We've collected and processed more than 35,000 metric tons of plastic, which has got us to this place. So very proud of that. We also, as you've seen, we've released the sustainability report, and we continue to work in terms of our ESS journey. We are only going to become fitter, stronger as far as that is concerned as we move into this year. Moving to the financials, slide number 15. As I've already said, our growth is 9% on the top line. The next slide is about what it's done to the bottom line. Unfortunately, because of the severe inflation, while we've grown 9% on net sales, our operating profit has dropped by 11%. and that shows in all of the ratios as well. Profit from operations is at 12.3%, profit before tax is at 12.7%, and profit after tax is at 9.2%. All I can say is that this probably was the peak as far as inflation was concerned, and we are pretty hopeful that things will become better as we go forward. So that's all from me. Happy to take any questions from all of you. So over to you.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. Participants are requested to ask two questions at a time. If time permit, please come back in the question queue for a follow-up question. The first question is from the line of Avnish Rao from Edelweiss. Please go ahead.
Yeah, thanks. My first question is on e-commerce and quick commerce. So if I see your data, last year e-commerce had grown 100%, and in Q1 it has grown 33% because the e-tax has moved on from 6x. Last year, wave 2 was very, very severe in Q1, so it's a very good growth. So my question here is, could you tell us how is the mix in e-commerce versus your overall company level? How are the adjacencies doing? Because you had called out that cake is extremely competitive in terms of overall, but is it doing better in e-commerce? And is the market share also higher in e-commerce, quick commerce versus the overall pan-India number?
Right. Hi, Avnish. This is Vipin Kataria. Yeah, so you're right. Last year there was a multiple growth and we are clocking a pretty large base. And even in this quarter, we have witnessed a pretty solid, robust growth. As far as the split between e-com and Q-com is concerned, I think it's evolving every quarter. While the large platforms like BigBasket, Flipkart, Amazon, Swiggy remain a large part of it, but as we see, there's a lot of consolidation happening in the space, and therefore it is very hard today to say what's the salience of the growth separately, right? Because it's a very, very fast evolving space. But I think the overall e-com space is doing pretty well, and like Varun pointed out, we partnered with some external experts, and they have given us pretty good learning, and we will build the capability here on. As far as the mix is concerned, the mix in these channels, whether it is e-commerce or modern trade, is far richer, better than general trade, and therefore certain subcategories in cake, there are certain categories in biscuit or dairy, which finds a natural higher salience in these channels.
Sure, that's helpful. My second and last question is on wafer and croissant. So you had called out in FY22 annual report that you want to take the leadership position here. So I want to understand where are you currently? I understand wafer is 750 crore category growing one of the fastest. Similarly, croissant you have doubled. So where are you currently and how much time you
10 years. But on a all India basis, we are already leaders. On wafers, it will probably take us a couple of years to get to that position.
Sure. Very quick follow-up here. Wafer number one market share will be how much, and croissant category size will be what, 300 crores?
Croissant category size currently is not more than 100 crores.
And what's your size?
Amish, it's a completely new category.
It's a completely new category. So we are building it. We are building the category. Wafers would be probably 500, 600 crores.
Yeah.
So in your annual report, you have given 750 crore size. My question was, market share of number one player will be what, 40-50% in wafers?
No. Wafers is a very fragmented category. The leader will be about 20%-ish.
It's a very fragmented category with a lot of regional players and private label. So this category is also in a very nascent stage.
Sure, that's very helpful. Thank you. That's all from me.
Thank you. Participants, you may press star and one to ask a question. Next question is from the line of Avi Mehta from Macquarie. Please go ahead.
Hi, sir. Thanks for the opportunity. With these price hikes, to cover the inflation and with cost-saving benefits starting to, focus clearly in place, would it be fair to expect EBITDA margin to normalize to pre-COVID levels in the second quarter, or do you think it will take some time more?
No, I would think that normalization is around the corner.
Perfect, sir. Perfect. And sir, I just wanted to pick your brains on, the comments that you had made in the earlier quarters about price hikes, about the worry that you had about, sharp price hikes hurting category growth. As customers, switch out, do you see that, or is there a change in that thought process? How would you want to look at it now, given that the increase is almost, I think, 10 plus 10, so about 20% or so? Please correct me if I'm wrong.
Yeah, no, you're right. So the total price increase would be, over 20%, right? So yes, the point is that there has been a drop as far as volumes are concerned. You know that our volumes are in negative territory. Albeit small single digit, very small single digit negative territory. But the number of packets that we sell is flat, and we are hopeful that this will start to grow once again. So what's happening really is that there is biscuits, there is bakery products, and then there are other products as well. If you think about it, biscuits is the cheapest form of snacking. So even within snacks, there has been a choice that the consumer is making, and in that process, we are probably ending up winning, and that's why we are not facing the kind of the kind of drop that we were thinking we would face. And I think now that we've gotten to this stage where we've had 2 clear years of price increase, and we haven't seen a huge negative as far as volumes is concerned, and we continue to see fairly positive revenue growth. I think it's a good sign, and it shows that we should be able to weather the storm in a good way.
Okay, sir. Perfect. Sir, and lastly, with your permission of bookkeeping, the number of ICDs in this quarter? That's all from my side. Thank you.
Venkat, what is the number on ICD?
So, as of 31st March, it was 740 crores. And as of 30th of June, it is 690 crores.
Thank you very much, sir. Thank you.
Thank you. Next question is from the line of Percy Panthaki from India Infoline. Please go ahead.
Hi, sir. Just wanted to understand the volume. It's negative 2% this quarter. So when do we see it sort of reviving back? Even in value terms, the growth is around 9%, which is a little below what I would have expected. So what is driving this softness in growth?
No, so if you look at our last year base, it was a fairly high base. Vipin, what is our 2-year growth? It's a pretty robust growth. So we'll just come back with that number, but it's a fairly robust growth that we've seen if you look at a 2-year number. Huh?
It's about 11%.
3-year growth is about 11%. So that's a CAGR of 11%. So we are in a good place there. I don't think there's any issue on the top line growth perspective, and I think volumes will start to come back. I don't think the consumers have seen a 23-24% price increase in 2 years or 6 quarters like they've seen it this time. So it's bound to have some impact. There will be some impact, but I think we are on a path to recovery.
Right. On the price increases, have there been any in the last 3-4 months? And are there sort of any which you think you need to take in the near term, next 2-3 months?
Yes, there have been. In fact, we were not. So as I was telling you, the total inflation that we faced from Q4 of last year to Q1 of this year, it was approximately 180 crores only on the bakery business. And so we have to take, and this was probably the steepest inflation quarter. And we were not able to take the entire price increase during this quarter. So we have taken some price increases in the first quarter, and we will complete that in Q2 of this year.
So, sir, by Q4, I think on a YOY basis in Q4, you had a price inflation of about 10%. So from that level, how much incremental price increase you have either taken or is in the pipeline over the next 2-3 months?
It's about, so in Q1 and Q2, it'll probably be 6 or 7% price increase that we'll have to take.
Okay.
6%.
Okay. Okay, understood. Secondly, coming on to your innovation pipeline and also your product mix, what I just wanted to understand is that versus pre-COVID, is the product mix now sort of more superior in terms of if I strip away the price increases and look at the ASP, which would be only the mix impact? Are you seeing it higher than pre-COVID level, or is it that because of a huge amount of inflation generally in the economy as well as in FMCG products and biscuits that people have sort of downtraded and the mix effect is negative versus pre-COVID level?
No, we haven't seen a negative mix effect. Our premium segments have been doing fairly well. And even the belly of the category has been doing well. So it's not like that, the bottom of the pyramid products are seeing a huge resurgence or anything like that. Amit, Vipin, you want to comment on that?
Yeah, so see, we also shared the organized trade, which is moving up, and that really helps in the mix.
Downtrading to smaller pack sizes, etc., or no?
The small pack sizes are a fairly large component of our portfolio, but no, it's not a visible. The contribution of the saliency of the large versus the small packs hasn't changed dramatically.
Thank you. Percy, sorry to interrupt you. I'll request you to join the queue once again. Participants are requested to stick to 2 questions per participant. The next question is from the line of Shirish Pardeshi from Centrum Broking. Please go ahead.
Hi, Varun. Good evening. Thanks for the opportunity. In this slide, what you have referred, there was no mention about the international. So could you tell what is happening in the Africa and Uganda and Nepal?
No, I did mention it's a part of the slides. It's doing really well. We've had a good quarter as far as international is concerned. And I did mention that, for us, if you look at slide 11, if you look at that section of international, we've extended our leadership in Nepal and also Middle East is back. Africa, we have a few irons in the fire. It's not, with the kind of inflation that countries have seen there, and also, what kind of, the protectionism that countries are bringing to the table has, been an issue. But despite that, we've grown almost 24% in Africa and AGCC. So it's a good performance all over as far as international is concerned.
Just one follow-up, Varun, here. We have put local contract packing in Africa. So,
yes.
And also we are exporting something from India.
Yes.
So what is the contribution for the international X of India?
Sorry, just repeat that.
What is the revenue contribution which we are drawing, which is X of India? I mean, not sent from India.
It's very small currently. It's very, very small, inconsequential.
But do you think, right, in the past, maybe we have done few acquisition in the Middle East, and then later on it fizzled out. But does this acquisition or maybe the contract packing arrangement will have a significant revenue contribution next 3-4 years?
No, so if you're talking about Africa, my comments are related to Africa. If you're talking about Middle East, we've got a significant part of our production happening there. But Africa, whatever we are doing with our contract packers is very, very small as of now.
Okay.
Yeah.
My second and last question on the dairy. Last call, you have been guiding that there is a commercial production which we are going to take. So
Yeah.
what is the status there, and maybe if you can say that when we see the significant ramp up of revenue?
So we've commercialized our a spray dry plant. So we produced the first bag of SMP there a few days ago. But the total commercialization will be happening in stages. We will do drinks. Now that we've started the spray drying, we'll move to drinks in the next 2 or 3 months. We'll also start the raw cheese plant where we make cheddar. The processed cheese plant, because of this semiconductor issue, etc., is going to happen sometime in the first quarter of next year. So that's how the phasing is looking.
And any further capex you have planned on dairy?
No, there's no more capex. Whatever was planned is already getting in. And we are seeing very good traction. So hopefully this is going to be a very good venture for us. We've seen a 40% growth as far as dairy is concerned in Q1.
Okay. Thank you, Varun, and all the best to you and the team.
Thanks.
Thank you. Next question is from the line of Varun Singh from IDBI Capital. Please go ahead.
Yeah, thank you very much. Sir, my question is on milk bikis. So we did a very high decibel marketing campaign and we were very much bullish for premiumizing the largest category. So, sir, any comment over here with regards to how the rollout in the northern market is tracking, and if you can also give some objective commentary with regards to milestones that we wish to achieve and where we are as of now? So
milk bikis has been one big success for us. in the Hindi belt and, in other parts, it was predominantly a Tamil Nadu product, where we have a 90+% share. So we've been working at both ends. So what we've done in all the other markets, we've rolled out our Milk Bikis Atta with a proposition of Doodh Roti Ki Shakti, which is doing really well for us. And it's giving us, it's not just one state or two states, it's giving us very good results across the other states other than Tamil Nadu. And that continues to be a big resurgence for us. We've also done in Tamil Nadu, we launched a Milk Bikis Classic, which is all about the nostalgia of, the Milk Bikis when we were growing up, kind of a thing, which has also done very well for us. So between the two, it's been a very, very good brand for us from a growth perspective. Amit, you want to comment? Yeah. Okay.
Okay. Sir, if you can give some guidance with regards to, what is the revenue size that we would have achieved under this brand, and what are we aspiring for?
On Milk Bikis?
Yeah.
So Milk Bikis, we crossed 1,000 crore mark the last year. And, it looks like it will be well past 1,000 this year.
It's growing pretty well, and at both ends, the South business as well as the All India business. So it's been a very good story for us because it's a product which was a regional product, but we were very proud of what it was. And the thought was that if it's such a strong product, why can't it become a national product with salience in every state? And that's what we've been able to do.
Okay, thank you very much, sir. And sir, last question on, sir, what percentage of our manufacturing is contract manufacturing as of today?
Probably about 40%.
Okay, so it continues at 40%. Okay,
Yeah.
sir. Thank you very much, sir, and
Yeah.
wish you all the best.
Yeah, thanks.
Thank you. Next question is from the line of Latika Chopra from JP Morgan Chase. Please go ahead.
Yeah, hi. Thank you for the opportunity. My question was, if you could share some color on what is the salience of biscuits and the bakery adjacencies in your domestic turnover today, in terms of both volume and value. And also, how do you think this is going to trend, over the medium term?
So it should be about, I would say, just under 80% in domestic only. But the smaller part of the business, which is adjacency, has been growing a little faster, and we are hoping that in the next 5 to 7 years we can get this to be, let's say, 55 to 60%, with 40-45% of our turnover coming from all of our adjacency businesses.
And Varun, what the profitability metrics, at least on the gross margin level for these adjacencies, how do they compare against biscuits?
So we've got a very clear grid that we work on. We do not launch any products unless they are accretive to our gross margins. So the overall profitability might not be there because these products require, some amount of, nurturing and advertising, etc. But overall, all of our new products have a more accretive and a more attractive gross margin than our current gross margin on biscuits.
Sure. And last time you mentioned that the NPD contribution to your sales is about 4.5%. Has that number stayed in this band, or with a lot of new launches that we are seeing, you think this number could trend up meaningfully?
No, it will definitely trend up as we go forward because this year, after 2 years focusing on the core, we've now ventured into a lot more innovations. So I think that this number is only going to go up, and probably we are looking at more like about a 5% revenue coming from innovation.
Okay, and just lastly on capex, for FY23, are you still maintaining a 650-700 crore kind of a capex, and what's the amount that you incurred in Q1? Thank you.
So capex, whatever has been committed, it will continue. In addition to that, we are putting up 3 factories. I think I spoke about it last time as well. So we are, extending our Orissa factory. We are putting up a factory in UP, which should be ready by next year beginning. We are putting up a factory in Tamil Nadu in Tirunelveli. And we are also looking at one more factory which will be commercialized a little later, which is in Bihar. So these are the 4 that we are working on, and obviously the work on Ranjangaon continues. But thereafter, I think we are going to take a little bit of a capex holiday, except for innovations where we require some additional investments. But I think we are going to be in a very solid place with factories in the right places. So, and as you know, that we're getting very good incentives for all of these factories. So we are doing this in a way that we have production in the right place, close to our demand centers, which gives us efficiencies, which gives us fiscal benefits, and at the same time gives us the space to grow much faster than what we've been growing at.
That's useful, but possible to put a number on the kind of investments which go behind these 4 factories and the timing of phasing out of capex?
So the UP and the Tamil Nadu factory are going to be approximately 300 crores each. The Bihar will probably be slightly lower than that. The extension in Orissa is not going to be too much. Ranjangaon, we've already committed 1,500. We are almost at about 1,300 now. So that's the kind of investments that we are looking at.
All right. Thank you so much, Varun.
Thank you. The next question is from the line of Chinmay Gandre from Reliance Nippon. Please go ahead.
Yeah, thank you for taking my question. So I just wanted to understand your thought process in this thing in more detail with respect to your earlier stance of the overall consumption. Was supposed to get impacted, but now we are kind of putting out that maybe we have more confidence in terms of the consumption, and you see fairly decent growth rates despite of the inflation, and we also have taken a decent 20% kind of a price hikes, right? So just wanted to understand the change in thought process or changing how we are looking at things.
No, so you're right. Whatever you said is absolutely spot on. We were nervous as we saw inflation year on year. But as we've continued on our agenda, we were still a little nervous. But as we are coming to an end as far as price increases are concerned, and we are seeing the results on the ground, we feel definitely more confident than we were in the last 6 months. So feel positive. I think the consumer today have the capability to absorb these kind of price shocks, and that's what they are reflecting in their purchase behavior.
Yeah. And my second question is with respect to your price increase. So, when we kind of initiated the price increase last year, so for us, the 10% price increase took us almost 6 months from Q3 onwards. Till Q4, we took around 6 months or more. And I presume, now we are at 20, so another 10% price increase we have kind of implemented or are in process of implementing. But this time, you are fairly confident that by Q2, more or less, this would be effective. So just wanted to understand this.
Yes, yes. By Q2, we would be almost where we would want, the pricing to be. And, we'll also be able to understand where the inflation story is going. I am fairly confident that from here on, it's only going to get better. But one step at a time. You can't be sure in today's world. So we'll see how it unfolds as we move forward.
So this time we are able to, implement price hikes faster, and because last time we took much more time in terms of adjusting the pack sizes and more from that perspective.
No, that's absolutely right. I think the team came together really, really well, and they just did a fantastic job of implementing the price increase.
Thank you. Chinmay, I'll request you to come back in the question queue for a follow-up question. Next question is from the line of Alok Shah from Ambit Capital. Please go ahead.
Yeah, hi. Good evening. Well, my first question is on the margins. On one side, there are signs of RM inflation abating and then potentially moderating. And on the other side, there are plans to increase the cost optimization to 3% now versus 2% earlier. So in that context, wanted to check when you get to see this margin expansion, what will be your priority in terms of spending? Would you like to sort of reallocate more towards spend, marketing, etc., or would the sense would be to
Alok, sorry, but your voice is very feeble. Can I
yeah, sorry. Is it better? Is it better?
Yes, and can you repeat your question?
See, I've understood the question, so let me try and answer because your voice was not coming through. There's something wrong with your line. But I've understood your question. Yes, we would want to, as pricing normalizes, as profitability normalizes, we would like to spend some more money in supporting our brands, our innovations, our new products. So we would normalize our, advertising and sales promotion spends as well, which will give us some muscle on our brands, new products, and new categories.
Got it. And just a follow-up to that, while you're pushing your adjacencies and the new products, is the thought process more towards doing the trade channel spend that gives you a better ROI, or is it more to do with the media? In the initial 2 years is what I wanted to know.
No, we do not support trade spends. My head of sales is sitting here and smiling. So we will do consumer-oriented spends.
Okay, got it. And lastly, just want to check if you're open to commenting on this new speculation of about appointment of CEO, etc. Just want to check if you're open to commenting on that. Any views? Thank you.
No, I think it's a trifle early, but we will comment on that. I think I will comment once we've done all of that internally and we followed whatever are the regulations for the announcements, so we can chat at that time.
Sure, noted. Thank you very much for future quarters. Thank you.
Thank you. Participants, we'll take the last question from the line of Hasmukh from Star Union Dai-ichi Life Insurance. Please go ahead.
Yeah. Hi, thanks for the opportunity. My question is on growth from Hindi belt. So we are constantly increasing presence over there. But this time, let's say, monsoon seems to be weak in the parts of UP, Bihar, etc. So do you think this will have some negative impact on us in the coming quarters?
Not really. We've had, during COVID, we did have a little bit of a setback in a few states. Setback not in terms of, growth. We still continue to see good growth there. But some setback in the kind of targets that we set for ourselves because, supervised distribution was not possible during that time. But we are coming back very strongly. So we continue to do really well in UP, in Gujarat, even in MP. We had a little bit of a setback, but we are coming back reasonably strong. Maharashtra is doing well. We are still struggling a bit in Rajasthan, but it's a very small state for us. Bihar is in any case a very strong state, and we continue to gain muscle there. Even Orissa is a very strong state. We've become dominant market leaders there. So I think it's looking reasonably good, barring Rajasthan, where we'll need to do a lot more hard work. I think the other states are looking very robust.
Okay. Thank you. That's it from my side. Thank you.
Okay.
Thank you very much.
Thank you, guys. Thank you very much.
I now hand the conference over to Mr. Mayank Mundra for closing comments.
Thanks everyone for spending time with us on this call today. We look forward to interacting with you again. Thanks.
Thank you very much. On behalf of Britannia Industries Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.